Viewers, thanks for tuning into this broadcast. We're talking about IDFC First Bank numbers with Mr. Vaidyanathan. Of course, we'll also talk to him about consumer sentiment and how does he expect that to shape up over the course of the next few weeks, months, quarters as the lockdown opens up. And of course, how would IDFC First Bank perform in that scenario as well? Mr. Vaidyanathan, good having you. Thanks for taking the time out and speaking to us.
Thank you.
Optically, the numbers seem good as well. There is some progress on retailization of loans. Deposits haven't been too bad, but core profits remain weak. Asset quality concerns linger, not just for you, but for the industry at large. Put the quarter into perspective and put the current quarter into perspective, because if 7 days of lockdown can do that, what would 2 months of a lockdown do to the space at large and to you in particular?
I think it's a fair question, but if you said put the quarter in perspective, let me just say that it's been a hairy quarter to start with. I mean, it started with January and February being fantastic quarters. We saw very good growth. We saw every retail business growing. We saw credit losses, on the retail book coming to an all-time low in these 2 months, which, by the way, even for the quarter was pretty good. NPA was low, so all things were looking pretty good at trending well. But I think after March, I think lots of things changed. I think global markets crashed and Indian markets crashed and stock prices are off maybe 20, 30, 40%. This one bank's incident happened. We raised equity in this quarter, which was 2,000 crores, a big thing. So I think it's been that sort of a quarter. I think it's been a bit of an action movie, I think.
This quarter as well in a bit. Firstly, what happened in the quarter? So the reported profit, I mean, you've had gains minus for the last 6 quarters there haven't been, so which is actually good. The reported profit in the black, but the core PPOP, I believe, minus the provisions, excluding one-offs, remained low, and I presume there were some capital gains as well in the quarter. So can you strip it out for us? How was the performance therefore devoid of all of this, and what do you expect the quarters ahead to look like?
No, thank you for that question. As you know, we have always been very transparent about breaking up our numbers and reporting it. In this case also, we did something important. In our pre-provisioning operating profit, we subtracted what we called was our treasury income, and we reported the numbers net of that. And on a PPOP basis, net of treasury income, also this year we saw a growth of quarter to quarter. When you compare quarter last year, Q4/19, Q4/20, our profit is up 70%. Basically, in this quarter, we had a sale of Yes Bank shares that netted us close to about 97 crores. So, but it should not be assumed that the entire profit of this quarter came from that one sale alone, because end of the day, we also took a coronavirus related provision of 225 crores, which was also arguably an unexpected item. So you could imagine there was an unexpected income from one side. There's also unexpected loss from the other side of provision of corona crisis, but yet we posted a profit of close to about 71 crores, which I think all in all, it represents, I think, a fair result. There were also certain trading income. So I think there were some one-timers, there were some one-time hits, but all in all, it would be fair to say our profit was appropriate at 71 crores.
On the asset quality, GNPAs, net NPAs, pre-moratorium, post-moratorium are well known. The question is, would the street largely be correct in being concerned about asset quality, not just for you, for the space at large, but since I'm talking to you, I would be tempted to ask you about what you believe would be your asset quality picture for quarter one FY21 and for the year ahead?
I think for the industry as a whole, no doubt about it, if this corona crisis, if underlying customers are having stress, which they have today, no doubt we should be concerned across the system. I think that having said that, I must put an important caveat here. By extending the moratorium period by 3 more months by the RBI, which I think is a good move, now customers have had that amount of an extra window to start securing cash flows to pay you back. If, for example, installments had to start being were required to be honored, say, in June itself, I would say that customers would have been in real stress. I think because, lockdown is practically going on till end of May. But if June, July, August, markets are open, economy is open, lockdown is lifted, but no repayment of EMI, think about it, that amount of cash flow is retained with the entrepreneurs. And cash flow is like oxygen. And I'm happy they're getting oxygen for now.
I'm just still trying to get an answer, Mr. Vaidyanathan. I know it's difficult to say this probably because it's a bit of a. I think one of your peers mentioned that we are all moving around in the dark right now or moving around blind. Would you reckon that there is a higher probability of asset quality
I would
issues
not
being
say
very
that.
high?
It felt like flying in the fog, being being blind, but it's not so now. I believe that by giving them a 3-month moratorium, we have given oxygen to them. We are given oxygen to them for being able to collect the EMI. Think about it, not just for making a good headline, but think about it. If 3 months they're not honoring EMI, that amount of cash flow is accumulating with them. It's a good thing. So I believe if you felt like that even a week ago, you should feel a little better now after the announcement because you're letting customers generate that amount of cash cushion. I believe that things will get better after September. But to your question, therefore, how will asset quality look like? If the economy comes back to shape, 3 months is a long time, and things can come back. I can tell you an incident or two about how, in the location where markets lockdown is lifting, that experience that might give you a picture.
Sure, please go ahead.
Yeah, we just realized that Jaipur, Orissa, Delhi, in some of these locations, lockdown is already lifted. And we were actually seeing that people are coming and buying laptops, computers, air conditioners, refrigerators again. And therefore, our people are actually telling us that the initial walk in the branch in these locations, more because of maybe a pent-up demand, but there is a strong walk in there. You speak to some of the consumer durable stores. So I feel there is something happening in the economy at this point of time, which will show up only after maybe 3 or 4 months. But we are seeing some initial embers where lockdowns are lifting.
Actually, let me probe that a bit. You have immense experience in this space. What would happen to consumer spending, for example, in a country which has seen, arguably, which we will see the first GDP contraction in so many years? In my investing career, my journalistic career, I haven't seen this. I don't know if you have. And these job losses, salary cuts, all of that will have a bearing on consumer sentiment, right? I presume you too, at your end, have taken some salary cuts as well.
No doubt. Actually, I believe that people are very pained. I believe small businesses are very badly hit because of lack of cash flow. They did not have much reserves to live with. Salaried people have not seen any increment, to the best of my knowledge, in any industry. Not that I'm aware of. Maybe there are a few exceptions here and there. Salary cuts are also happening. Some extent of organized sector job loss is also happening. So yes, there is definite stress in the system, and you're right that we have not seen such a extraordinary event in our lifetimes. But there is one very important thing that has not changed. The end consumer is a person who is fundamentally wired to pay back the installment if they can. And that's how they are, because by not paying it, the personal credit bureau score gets affected and people bother about it. Therefore, even if people are not able to honor the installment, maybe in May or June or July or August or September, when the economy opens up and cash flow builds, money will come back. So I'm going with the theorem that consumers may delay, but they will pay. And that could be a fair theorem if given time.
I was just trying to correlate because I think you at your end too have taken salary cuts, announced salary cuts for a wide range of employees too, right, Mr. Vaidyanathan?
Yes, it is not a very wide range actually. It is myself and my one downs. Basically, this who the senior management people of the organization have taken a 10% cut voluntarily, and I thank them for that. I have taken a 30% cut to my compensation, including allowances. We felt that everybody around us, whether it's a coconut seller or just anybody, any shopkeeper, kirana shop, everybody has suffered loss of income. So really, if we are well paid people, and therefore if we have take a 30% cut, it is only appropriate that we are part of the occasion, and everybody takes a little pain. It also factors for austerity, because austerity starts from the top, and you got to reduce expenses in the bank. It starts from the top. I think it sends two important messages for our people at large.
Hmm. Actually, I was going to come to that. What about how margins would shape up? Because I would presume that when I look at the data of how your retail deposits, both retail CASA as well as retail term deposits have inched up quarter on quarter, that would have been on account of higher rates than peers, right? I mean, aside of other factors, higher rates would also draw. So, would your cost of funding and therefore your overall cost be higher, and would that impact NIMs, or do you reckon it will be under control?
No, we are running a rather unique model. We are not playing in the low yield corporate market. For example, we don't lend to, at say 8.5% to the to a absolutely highly rated corporate. For example, there is certain market which banks have historically built that we are not there in. Think of us more like a capital force that is now converted to a bank. So for a capital first or an NBFC, borrowing at 7% is like a dream, because borrowing cost of NBFC is 9% probably, or 10%. So think of it, of the lending model of capital first, the borrowing cost of a bank. And I think if you think about it like that, 7% is really very inexpensive money. That's why we're able to borrow money at 7, pay investors, or depositors 7% on savings, and also get a net interest margin of 4.3% or 4.2%. That's the reason we're able to do this. And I think this story can sustain with us.
Okay. Since you mentioned capital first, I just have one last question on this interaction, and that is, how is it? I mean, what do you tell people? Let's say there are a set of investors who are coming and asking you, in your wisdom currently, how would the next 9 months shape up? My question is this: it's a perfect storm, right? There are people who are. I agree that people want to pay back, but we have to agree that the consumer spending might take a bit of a backseat because there have been job losses and salary cuts. So, in a scenario when consumer spending might take a bit of a hit, we have migrant workers moved out, and therefore the MFI space might take a bit of an issue in terms of their repayments, etc. And maybe your customers too might be, some of them might be of that profile, if at all. I do not know, but I'm asking you, how would you be as the management uh, talking to investors about what the 9 months would go up? Why shouldn't there be a possibility of nasty surprises coming in? Because I think investors seem to be baking that in when it comes to the Indian financial space right now. And one can see it in the way the stock prices have gotten decimated.
Absolutely, stock prices have got decimated, by 40 to 50%, I think, across the board in the last 3 months. And who could have imagined this could have happened? But basically, they are baking in definitely the worst. Think about it. At this point of time, you're not leaving your homes. Every city looks like a ghost town. There are no shops. There is no activity. There is no traffic on the roads. There are no spending. So this obviously is in my opinion the worst of where it can get, because you will not, it's in the feeling, and that's it's reflecting in the stock prices. But let us look, say, 6 months ahead, and let us imagine that Neeraj, that shops are open, people are on the roads, people are going to the offices, and economic activity started. You will not feel like that. So I like to say, it's darkest before dawn. It is definitely one of those things, and it's playing on your psychology even today as I speak, no doubt about it. Therefore, I think that when you look 6 months forward, and hopefully economic activity is happening, base effect will come to play, because it's been arguably the worst year. Just to corroborate what he just said, that is the worst summer seen for colas, for for biscuits, for ice creams, for refrigerators, for air conditioners. It's just the worst summer ever. So obviously things will get better from here, and next year base effect will kick on. you'll see economic activity. So we should always look a little ahead. If we look like a here and now, we will always make wrong decisions. Secondly, let us not forget that India is not a closed story. It's very, it's like, think of it like a 1 year you've written off economic activity for a while. But there's year 2, there's year 3, year 4, year 10, and life will be back. So that's the way to think about it. I think about it, because at least I'm building this bank, IDFC First Bank, for the long run. And if we have to sacrifice this year in the process, that's part of life. What do we do? It's Corona. We didn't. It's the way it's come.
Yeah, completely. I mean, it's nobody's fault the way it is shaping. I was just trying to get a sense whether you believe that there could be some nasty surprises that could come out, or do you reckon that?
My sense is that the nastiest surprises is probably baked in the way stocks are valued today.
Okay.
But I mean, I'm not a good judge of stock prices. I have no investments apart from my own bank. But I'm just conceptually saying that market's probably fearing the worst. End of the day, this amount of support from the government of 20 trillion rupees, a good portion, 8 lakh crores coming from the RBI. It's all not going to count for nothing. Things have begun to move. I mean, we have to go. We are in business after all, and we have to go with the assumption.
Okay. Mr. Vaidyanathan, we'll leave it at that. Thank you so much for taking the time out, and all the best for the quarters ahead.
Thank you very much.